But over the last couple of years, while we haven't made a lot of forward progress, we have been rescued, from these sell-offs, the slow ones and the quick ones, all of a sudden by what I guess you could call feelings. Sentiment all of a sudden turns on a dime. And sometimes you're right. It's because of something that the Fed said. Now, the Fed's remarks, by the way, what they basically said was that they're not in a rush to preempt some kind of crisis. They're still talking about being in a position to react. So I don't know. Take that for what it's worth. July is a meeting. It's a live meeting, whatever. But I think the bigger picture is this: two things. Number one, this still feels like an oversold bounce. The sectors that are bouncing the hardest today were the hardest hit, like semis and things of that nature.
Financials.
So XRT was destroyed, up 3% today. That's the retailers. Transports up 2.5%. They have been annihilated. If that's where you're seeing the action right now, I think it still smells like an oversold bounce. A bounce to 2,800 on the S&P, by the way. That's the level that people are watching. But the thing I want to bring out, something remarkable happened yesterday that I think is going to capture a lot of people's attention and already has. You had a monster day of outperformance for the IVE IVW ratio. IVE is the value side of the S&P 500. IVW is the growth side. It is right now at the lowest point, that ratio, since October of 2000. It's incredible how long growth has been destroying value stocks. Yesterday's move was remarkable. I think it took people's breath away. You had this huge outperformance in value out of nowhere.
Well,
and people say, like, why would that all of a sudden happen? What does that mean?
Well, give me a few negative headlines about some of the highest growth stocks in tech, and you get obliterated.
Okay, so you know me. I don't like these types of narrative-driven things where, oh, here's the news, and now we have this new trend based on it. But it wouldn't shock me. It wouldn't shock me if you do see that trend continuing past one day. So we'll keep an eye on it. It would be very interesting turn of events for the market this year to have value finally win one.
All right, TIAA value.
Would be nice.
Investor.
Steph would love that. For that reason alone, I want it.
Would be really, really nice.
What do you think about that?
May was very hard for value investors or core with a value bias, which is really what I am. I mean, what led is exactly what Josh is talking about. It was growth, it was defensives, and it was growth tech, right? It was software and services, the SaaS guys, and FANG. And so you had some bad headlines yesterday with regards to FANG. I get it. By the way, I don't think we're going to hear for years on regulation. So I think it was overdone, but it might take a little bit of time to play itself out, mean revert, right? Because they were such leaders. But I would say on
it was so ugly yesterday, too, right?
It was
ugly.
My gosh. And they're crowded. But
Facebook was down like more than 8%.
What's even uglier? But wait, what's even uglier is the SaaS software guys, which is, talk about crowded. And they are starting to roll, and that is because enterprise data points are actually starting to slow. Not a disaster, but on the margin, when you have crowded trades like this, it doesn't take much. But this is a year about rotation, and that's exactly what we're seeing. What we saw in May was different than what we saw in April, and now it's kind of coming back again. I mean, I hope that value is here to stay. That's where I'm positioned. That's where actually I've been adding, because some of them have gotten really hurt hard. Industrials, financials, even discretionary.
We're probably going to need growth, though.